Welcome to the I Told You So podcast. I'm your host, Dr. Ben Kohl. On this podcast, I select topics to debate with listeners and guests of the I Told You So podcast. Listeners and guests predict what will happen in the future. I track predictions and announce who predicted accurately when those predictions become true. The podcast offers topics where listeners and guests can debate with the purpose of predicting the future so they can proudly say, I told you so. To join the conversation and offer your opinion, I invite you to text or call 1-785-473-3721 or send an email message to ITYS at BenKohlITYS.com. That's BenKohlITYS.com. Or post on any of my social media channels. The purpose is to offer your opinion with the goal of predicting the future so you can proudly say, I told you so. My guest for this episode is Dr. Terry Mason. Dr. Mason is an accounting professor at Kansas State University, where he is the director of the Master of Accountancy program. Dr. Mason teaches financial statement analysis and business valuation and conducts research in the capital markets area. On this episode, we discuss economic predictions with a focus on stock markets. So with no further ado, I introduce to you Terry Mason, and thank you very much for joining with us today.
My pleasure. Thanks for having me on.
Yep.
So you just want me to jump in?
Yeah. I mean, so give us your thoughts. Let's start with the Dow. Let's start there and maybe give some background information about yourself and how you got into this and what makes you think about the stock market and why why you are going to predict the stock market goes in certain directions.
Yeah, so I mean, I've been trading stock most of my life, and so I got a PhD in accounting from Florida State, and a lot of accountants will focus more on tax, they'll focus more on audit, and I just really wanted to be more capital markets, more finance focused. So I'm one of the most finance focused accounting professors around, and so I just fell in love with stocks, and I've been actively trading. So I actively trade even in my retirement accounts. So I'll probably make 20, 30, 40 different trades and changes a year in a retirement account, where a lot of people would just sit and let their retirement account grow in the same account. I think I have some advantages from doing that. I can pick up a percentage point here and there. And so as far as the Dow goes, my prediction for the Dow is that it's going to grow about 50% over the next couple of years. The reasoning for that is because interest rates are high right now, which is kind of keeping our economy down. And I think the economy is going to continue to recover. And as it does, I think the Fed will start lowering interest rates, and that's going to cause stocks to go up abnormally during the next couple of years and hopefully generate some good returns for us.
All right. So let's talk about the Russell 2000.
Yeah, so let me give some background. So I'm going to predict that the Russell 2000 is going to go up about 80% in the next 2 years.
Okay.
If you're not familiar with the Russell 2000, then I would just tell you, if you want investment exposure for the Russell 2000, then you're going to get some kind of ETF, right? So you're getting an exchange-traded fund. You can do that. Vanguard has those. Fidelity has those. It's pretty easy to get a hold of that. If you've got a TIAA account or something like that, they have exchange traded funds over the Russell 2000 as well. Russell 3000 is usually what you hear, and Russell 3000 is the biggest 3,000 US based firms that trade on stock exchanges. And so I'm talking about the Russell 2000. So what that is the smallest 2,000 of those 3,000. So I'm saying that small firms are going to do better over the next couple of years than large firms. And that's just simply because small firms are more handicapped by interest rates. So as interest rates start to go down, it's just natural that small firms should gain more. So again, the stock market's going to go up abnormally about 50%, but I think small firms will go up closer to 80%. Even a 3-year return for Russell 2000, it wouldn't surprise me if it doubles, right? So maybe by 2027 sometime, we're looking at Russell 2000 doubling, and you're doubling your money if you're in the Russell 2000.
All right. So I think you mentioned before that the market generally returns about 12 to 15%, and can you maybe expand on that a little bit and why that happens?
Yeah, so I teach this to my classes. So I
Yeah.
teach financial statement analysis and business valuation. And one of the things we always talk about is how much the stock market makes. And so pretty much any decade you slice the stock market up. If you want to look at returns in the 1990s or from 1995 to 2005 or whatever it may be, the stock market the stock market always, however you slice it up any decade, will do better than the bond market. So that's just saying jump into stocks, right? And the average is about 12 to 15%, just because that's about the average additional money that people put in the stock market.
Okay, so do you think as interest rates decrease, what's going to happen?
Yeah, so I mean, again, as interest rates decrease, I think it's just going to cause stocks to go up. They'll go up almost monotonically as interest rates decrease. Now, what I'm predicting is that interest rates are going to go down, right? And I think right now the market is predicting that interest rates will go down about twice over the next 5 to 6 months. I probably disagree with that. So I think it's going to be pushed out a little bit further into the future, which means just because I'm predicting that stocks are going to double, Russell 2000 potentially double in the next 2 or 3 years, it doesn't mean that it's going to go straight up, right? So as interest rate decreases are pushed back, we're probably going to see the market go down a little bit before it starts to come up, which we've actually seen in the last couple of days. If you've been paying attention to the Dow and the S&P 500, you will have noticed that they've gone down a little bit. If you look at the Russell 2000, it hasn't gone down quite as much as the others. And I think that's because people are starting to move more funds over to Russell 2000, getting ready for this sprint that it's about to have. So.
Okay. All right. Well, anything else you want to add? Maybe some points that you share with your students, or maybe some testimonies of students who are kind of, I guess, taking your advice or what you're providing in class. Any testimonies from your class experience?
Yeah, no, absolutely. So what I do in class is I teach students to model stock, right? So when they're modeling a stock, we're usually not going to model like the Russell 2000 or any kind of exchange traded fund. We're going to model an individual stock. So one that we've modeled in the past might be Tesla, right? Tesla was big. It grew probably too much, right? And it's starting to come back down as the competition's starting to get more fierce. But that's what I teach students to do. Model an individual stock, and you compare your intrinsic value that you find for that stock price to the stock price in the market. And naturally, if you're finding that the stock is worth more money than what the market price currently is, then you're going to buy the stock, and vice versa, you're going to sell the stock.
Would you give that same kind of advice to the listeners of this episode, or would you what kind of advice would you give to listeners of this episode?
Yeah, so listeners of this episode, so again, maybe I should step back a little bit, because my students in class, I'm teaching them how to model. I don't expect everybody to know how to model. If you're not a financial person, if you're not an accountant, you're probably not going to model each firm. So the easiest thing to do is to get these exchange traded funds, right? You can invest in the S&P 500. You can invest in the Russell 2000. And generally, if you're invested in these exchange traded type funds, you're going to double your money about every 7 years is a great rule of thumb. And you can't hardly beat that, right? If you're in the bond market, if you're getting CDs, if you're in savings accounts, you're going to double your money every 20 years, right? Instead of every 7. And so if you plug into an Excel spreadsheet how much money you plan to invest over time and start figuring those percentages that I'm going to double this every 7 years versus double it every 20, you're going to end up with a bunch more money when it's time to retire if you're in the market. So I would advise everyone to be in the market as much as possible.
Okay. All right. Well, Dr. Terry Mason, thanks so much for being a guest on the I Told You So podcast. If listeners want to learn more, you can contact Dr. Mason, and he has an email address through Kansas State University, and you can look that up on the K-State website. But he's happy to talk with any listener. Or you can just simply reach out to me, and I can get you in touch with Dr. Mason as well. Because this podcast is about predicting the future. My questions to those listening are, do you agree with Dr. Mason and what he said about the stock market and maybe the advice that he provided? And what do you think is the next best industry to invest in? I know Dr. Mason mentioned Tesla as a model stock. What is a good industry that you think that would be wise to invest in? And also, just where do you think the economy is going, especially in the United States? Do you see it going in a positive direction? So let me know. Text or call 1-785-473-3721, or send an email message to me at ITYS at BenKohlITYS.com. That's ITYS at BenKohlITYS.com, or post on any of my social media channels. You can go to the I Told You So podcast website at BenKohlITYS.com to connect with me and get your own I Told You So items at the merchandise link. So the goal of this podcast is really to offer a safe space for fair debate and healthy discourse with the goal of predicting the future so you can proudly say, I told you so. Also, if your business or organization is interested in advertising on the I Told You So podcast, please let me know. Again, thanks for tuning into the I Told You So podcast, and thanks again to Dr. Terry Mason for being a guest on this episode. I do want to mention that followers of the podcast are very important, so please follow, like, subscribe, give a high rating, and share with your friends. I'm your host, Dr. Ben Kohl, and I hope to hear from you soon.